Let's trade the winner this morning. Scott Bauer is the CEO of Prosper Trading Academy. Scott, what do you think about Lowe's sitting near these highs and up on a down day here today?
I love the upgrade, and I think we got a chance for a breakout here. I really do. Even with higher interest rates, even the whole mortgage application, area it's getting hit here with higher rates. I think Lowe's, and I like Home Depot as well, but Lowe's especially from a technical standpoint, it certainly looks like it's ready to break out, Oliver. One thing that is kind of interesting to me is that option volatility, the implied volatility there is pretty cheap, which makes me want to buy time. When volatility is cheap and option prices are cheaper, you want to buy time with your options because they cost less. So in this case with Lowe's, because I'm bullish, because I think there's going to be a breakout, I'm setting up a spread, a signal, or if you will, that's called a calendar spread where I'm buying time. So I'm looking to sell the 270 strike call that expires in a couple weeks on January 21st. And I'm doing that to finance the purchase of my February 18th 270 call that I'm buying. So basically, this is a very bullish spread. I'm looking for Lowe's to continue to the upside here. Ideally, anything up near around 270 in the next couple weeks, even a little bit lower than that, is completely fine with me, because what I want to happen is for the January 270 call to, kind of whittle down, get as close to zero as possible by expiration, while my February call holds value. And then in 2 weeks or even before that, this type of situation, this type of strategy gives me the opportunity to maybe roll out, sell another call against my long call. So I really like the upside here. This is a very safe way, actually, of playing the upside here, and buys me time.
So Scott, why do this instead of, say, buy like an in-the-money call or something where to some extent there's some similarities, right, where you start making money on any upside from here because you're break even at 257. Lowe's moves up $1 from here, 50 cents. You're going to start making money. But eventually, if the timing isn't right for this one, then the other call will start to work against you that you sold. There's a little bit of timing element to this to some degree, is there not?
No, absolutely, no question about it. And the reason I like this as opposed to just buying it, like you said, an in-the-money call, is because of my risk tolerance. Buying an in-the-money call, if the stock starts going against me, I'm going to lose money really, really quickly.
Right, true.
But by buying this calendar spread and buying time, even if Lowe's just sits here or actually goes down a little bit, my percentage loss is going to be much, much lower in this type of strategy.
There you go.
Versus just buying an outright in-the-money call. So this is a much safer play to the upside. Yes, you can make a lot more money just buying an in-the-money call, and if the stock goes up, great. You're going to potentially hit a home run. This is a very safe, bullish play on this stock that gives me a lot of opportunity, a lot of potential to adjust along the way as well.
And in the context of a market here where yesterday even some of the early winners eventually got dragged by the downside, maybe this is a better way to tiptoe, to try and trade up if it's a down market, right? So it gives you a little bit of leeway in case there's broad drag that hits our winner here.
Well, it does. And one of the first things that I said was I'm a little unclear as to why the option volatility, implied volatility, is so cheap, is so inexpensive in LOW right now. And in this macro environment where we're seeing, volatility's on the upswing here, I love an opportunity like this where I can buy something that doesn't cost me a lot because volatility hasn't really exploded yet.
Cool. All right. I like it. Makes sense. Scott, thanks for the explanation. Appreciate it. Getting long.
Hey, Oliver, your calls on Bitcoin, by the way, you have been spot on.
Thank you, sir. I appreciate that. All right. Thanks, Scott.
Absolutely.
There we go. I didn't put him up to it. Okay.
Nope.
All right. Thanks, Scott Bauer, CEO of Prosper Trading Academy.